Okay, so this next video lecture is about our module number 8. So this is entitled Financial Reporting and Management Reporting Systems. Okay, so basically we will be discussing about the general ledger system, the management reporting system, and the data analytics and ad hoc reporting. Okay, so to start with, let us discuss about the general ledger system. So in a general ledger system, this is basically a hub which connects the other systems of the firm through the spokes of information flow. So in our transaction cycle process, the individual events will be recorded in special journals as well as its corresponding subsidiary accounts. So the summaries of these transactions flow into our general ledger system and become the source of input for our management reporting system and financial reporting system. So we all know that, and you were already familiar with this system flow of the accounting process. Okay, so we will start with the recording of the transactions or economic transactions once they occur. And then basically this will be the input that we will use later on in preparing the financial statements and other related and necessary financial reports to be used by the management. So the bulk of the flow comes basically from the transaction processing subsystems. And the information will also flow from the financial reporting system as feedback to our general ledger system. So this is how it is visualized, okay, or illustrated using this relationship of the general ledger to other information subsystem. Okay, so I think we have to enlarge more. Okay, so that's how information flows to and from the general ledger system. So basically, feedbacking or the input coming from the general ledger system will be used, as mentioned earlier, to our financial and management reporting systems respectively. Although in these cases, all of the transactions such as billing, sales, inventory, payroll, and so on. So these are where the transactions or the economic transactions are coming from, which will be captured and recorded in the general ledger system, and also will be used for financial and management reporting systems later on. Okay, so here we have for the voucher or the journal voucher. So basically, our journal voucher, this is a source of input for our general ledger. This can also be used to represent summary of some similar transactions or a single unique transaction. Also to identify the financial amounts that is recorded in the general ledger. So basically, journal voucher is an important source document, okay, used as an input to the recording of the economic transactions. So for routine transactions, adjusting entries and closing entries, these are all entered in our general ledger using journal vouchers. So a responsible manager should approve journal vouchers. So the purpose of this is to offer a degree of control against unauthorized general ledger entries, okay, to avoid manipulation of the recorded transactions. For the general ledger system database, so basically it includes a variety of files. So, and this will also vary from firm to firm depending on the nature and how their financial information structure is designed, okay, according to the needs of their of the business. So we have here the most common database, okay, in a general ledger system. okay, for most of the firms. The first, of course, is we have the General Ledger Master File. So this is the principal file in our General Ledger database. So this is based on the organization's published charts of accounts, and each record in our General Ledger Master is either separate account, for example, for sales, or a controlling account for our accounts receivable. And for a corresponding subsidiary ledger, also in the transaction processing systems. So in the financial reporting system, we draw the information from the General Ledger Master File, okay, to produce the financial statement. So as mentioned earlier, this is our input in the financial reporting system. For the management reporting system, on the other hand, they also use this file to support internal information reporting purposes. Okay, so we all know that in financial reporting, there are financial reports that needs to be submitted for outside parties such as government agencies for regulation. And for the management, we also have management accounting and cost accounting for internal information reporting and decision-making purposes. So all of this, the input in preparing these financial reports will be coming from our General Ledger Master File. So the second database or file under the General Ledger system is the General Ledger History File. So this has the same format actually with our General Ledger Master File, but its primary purpose is to provide historical financial data to compare financial reports from different periods. So historical meaning these are the data that is stored, okay, in the database, which reflects or corresponds to a prior period accounting or prior accounting period. Okay, so again, the purpose of this is for comparison, comparative financial reports to determine the trends or even for financial analysis purposes. Okay, so the third is our journal voucher file. So we mentioned earlier that our journal voucher is used as a source document to record economic transactions. So basically, our journal voucher file, this is the total collection of the journal vouchers that was processed in or during the current period. So this will provide us with a record of all the general ledger transactions and replaces the traditional general journal. But the purpose of this again is to be used as a source document for recording purposes. Okay, the next is the journal voucher history file. So basically, this contains our journal voucher for the past periods, just like our general or historical general ledger file a while ago. So again, this will support management stewardship responsibility to account for resource utilization. Both the current and historical journal voucher files are important, okay, for audit trail especially. Okay, so the next file is the responsibility center file. So in this or here, it contains the revenues, expenditure, and other resource utilization data for each responsibility center in the organization. So the management reporting system draws upon this data to be used as input in the preparation of responsibility reports for management. So in your management accounting or cost accounting, you have encountered about responsibility centers. But in this module also, in the management reporting system part, we will be discussing also about responsibility center. But basically, the purpose of this is to provide the management with the financial data related to the responsibility centers. Okay. And number 6 is the budget master file. So this contains budgeted amounts for revenues, expenditures, and other resources for the responsibility centers. So this data along with the responsibility center file, so this will be used as a basis for responsibility accounting. So those are the different files under our general ledger system database. So what are the GLS or general ledger system procedures in connection with the financial reporting system? So basically, the law dictates the management's responsibility that they will provide stewardship over the information for external parties. As mentioned earlier, this is for regulation. For example, if the financial reports will be submitted to the government regulatory agencies. Okay, so it is the responsibility of the management to provide stewardship and reliable and free from material misstatements financial information to those agencies and other users as well. So this reporting obligation is met through the financial reporting system. So basically, much of the information provided takes the form of standard financial statements, which is provided for us, and the guidelines is in our PFRS. Okay, so even for tax returns and documents required by regulatory agencies such as the Securities and Exchange Commission. So the primary recipients of the financial statement information are the external users. So we all know that they are the stockholders, creditors, government agencies. So these outside users of information are interested in the performance of the organization for regulation purposes, to monitor the stockholders' investment, return, and payment capability of the entity. So therefore, they require information that allows them to observe trends, especially in performance over time, and to make comparisons between different organizations. Okay, basically for sound economic decision making. So given the nature of these needs, our financial reporting information must be prepared and presented by all organizations in the manner that is generally accepted and understood. So that's why we follow PFRS and the generally accepted accounting principles in preparing our financial statements. So the community of external users are vast, and their individual information needs vary. So therefore, our FS should target a general audience. So the management should prepare financial reports that can be understood by the different users, following the accounting principles that are applied. Okay, and the statements have information content that is useful for the users. So that's very important to note in preparing the financial reports. Okay, so we go now to the financial reporting procedures. So we are familiar with this already. So actually, this is just the illustration of our accounting cycle. Okay, so basically your financial reporting procedure, this is the final step in the overall accounting process that begins in our transaction cycle. Okay, so we have the conversion cycle, revenue cycle, expenditure cycle. So the process begins with a clean slate at the start of every year. So we all know that we close the temporary accounts and forward the real accounts, okay, in the closing and post-closing trial balance. So only balance sheet or the permanent accounts will be carried forward, and the temporary accounts in our income statement will be closed, okay, after the accounting period, to begin to have a fresh start. Okay, so here are the following steps in our financial reporting procedure. So again, you are already familiar with this. First, of course, is the capturing of the transactions, meaning within each transaction cycle, revenue cycle, expenditure cycle, conversion cycle, the transactions will be recorded in the appropriate transaction file, okay, or journal or ledger. Second, we will also use the special journal in recording the transactions. So those frequently occurring transactions such as sales, we will use the special journals for this. While those transactions which occur rarely, we will record them in our general ledger or directly to our journal voucher. So we know that in our accounting cycle, right? Third is post to subsidiary ledgers, posting. So the details of each transactions will be posted to the affected subsidiary accounts, okay, so that the entity will know specifically the item or the customer, for example, the balances, okay, that will be collected or due to them or from them. So another is, after that, we will also post these transactions to the general ledger. So periodically we use the journal vouchers and then summarize the entries made in our special journals and subsidiary ledgers. So we will post this to our general ledger accounts. So the frequency of updating our general ledger will be determined by the degree also of the system integration used by the entity. Okay, so after the posting, what's next is to prepare unadjusted trial balance. Okay, so we all know that at the end of the accounting period, the ending balance of each account in our general ledger, it will be placed in the worksheet, okay, and will be evaluated for total debit and credit equality. Okay, so you're already familiar with this. After that, we will make adjusting entries. Okay, so we will also reflect this in a worksheet to correct errors or to reflect unrecorded transactions during the period, such as depreciation, or to recognize accruals and deferrals. After that, we will journalize and post the adjusting entries in our journal vouchers, okay, and then post it to their appropriate accounts in the general ledger. Number 8, we will prepare the adjusted trial balance. So all you have to do is to add or deduct depending on the side in which the adjusting entries was placed, okay, against the unadjusted balances of the account, respectively. Okay, after the adjusted trial balance, we can now prepare the financial statements. So balance sheet, income statement, cash flow using the adjusted trial balance. And then after that, we will journalize and post the closing entries. Basically, these are prepared for closing the temporary accounts and will be transferred to the income or loss or to retained earnings. Finally, these entries are posted also to our general ledger. And the last step in our accounting system is, of course, to prepare the post-closing trial balance to have a fresh start in the next accounting period. So a trial balance worksheet contains only balance sheet accounts, okay, or permanent accounts, which will be carried forward to the next accounting period. So this is an illustration of the real-time general ledger and financial reporting system. So we have here the departments, sales, purchases, payroll, and other subsystems. And all of the transactions will be processed in the data processing system together or with the general ledger, journal vouchers, okay, finally to the general ledger and financial reporting system, okay, to prepare our financial statements. Okay, so those are the procedures of the general ledger system for financial reporting system. Okay, so how do we control, or what are the controls, okay, to be used in the general ledger or financial reporting system? So here, based on Sarbanes-Oxley Act legislation, okay, basically in the US, I think, they require that management design and implement controls over the financial reporting process. So this will include transaction processing systems that feed data into financial reporting system. So here, control is very important because of the potential risks. These are the risks. Okay, there might be a defective audit trail, unauthorized access to the general ledger for manipulation. The general ledger accounts are out of balance with the subsidiary accounts. And number 4, there might be an incorrect general ledger account balances because of unauthorized or incorrect journal vouchers used. So that's why control is very important to implement to avoid these risks. So if these are not controlled, this risk may result in misstated FS and other financial reports. Thus, it will mislead the users of this information. So the potential consequences are litigation on the part of the entity, significant financial loss for the firm, and sanctions specified in the Sarbanes-Oxley Act legislation. So that's very huge responsibility on the part of the management. So that's why it's very important to apply controls over the general ledger and financial reporting systems. Okay, so in connection with the controls, so we have here from the Committee of Sponsoring Organizations of the Tradeway Commission or COSO controls issues. So here, when we say COSO, this is a joint initiative to combat corporate fraud. So we have here the following framework for the review of relevant physical controls and as well as examination of IT application controls, which can be applied by the management in their general ledger and financial reporting systems, respectively. For transaction authorization, so basically the journal voucher, this is a document used to authorize an entry in the general ledger. As mentioned earlier, this is used as our source document. So here, journal vouchers have numerous sources from cash receipts, sales order, financial reporting group, and so on. So it is therefore vital to the integrity of the accounting records that these journal vouchers be properly authorized by the responsible manager at the source department, authorizing the transactions to avoid misstatement, error, and fraud. Second is in terms of segregation of duties. So here, the task of updating the general ledger must be separate from all accounting and asset custody responsibilities within the organization. So therefore, individuals with access authority to general ledger accounts should not have any recording responsibility for special journals or subsidiary ledgers. They also should not prepare journal vouchers and custody over physical assets. This is very important to avoid, again, manipulation, error, fraud, and misstatements. Okay? So we all know the weight of segregating duties to avoid these potential risks. So to compensate for this potential risk, the system should provide end users and the GL departments with detailed listings of journal voucher and the account activity reports. So these documents advise users of the automated actions taken by the system so that errors and unusual events can be identified. Okay. Next is in terms of access control. So here, unauthorized access to our general ledger accounts can result in errors, fraud, or misrepresentation of our FS. That's why Sarbanes-Oxley Act legislation explicitly address this area of risk because they require organizations to implement control that limit database access to authorized individuals only. So this is very important to have limited access controls. Next, in terms of accounting records, so basically here, the audit trail, this is important because this is a record of path the transactions through the input, processing, and output phases of the processing of the economic transactions. So basically, this involves a network of documents, journals, and ledgers that can be accurately traced through the system. Okay? An audit trail will facilitate error prevention as well as correcting when data are logically organized. The general ledger and other files that constitute audit trail should be detailed and rich enough to provide the ability to answer inquiries, to reconstruct files if they are completely or partially destroyed, provide historical data required by the auditors, especially in auditing, to fulfill also government regulations, and as well as providing means for preventing, detecting, and correcting errors, and especially fraud. Okay, so that's very important in accounting records to have the audit trail. Okay, In terms of independent verification, so the FRS produces two operational reports. We have the journal voucher listing and the general ledger change report. This will provide proof of the accuracy of this process. So the journal voucher listing, this will provide relevant details about each journal voucher which is posted in our general ledger. And the general ledger change report, presents the effects of the journal voucher posted in the general ledger accounts. So this is to reconcile any changes made in the posting and recording. Okay, independent verification. And of course, for our IT application controls. Okay, for input controls, basically this is in the form of edits and check digits. Okay, so it will ensure that data coming from the journal vouchers entering our general ledger are free from errors, okay, that can corrupt the general ledger accounts. So the process controls such as error messages, passwords, and multi-level security, this will serve the same objective in the GLS as they do in transaction processing applications. So output controls also needs to be in place to ensure FS and other management reports produced by the financial reporting systems arrive at their intended destinations. So one process control issue, however, in this case is related to the automated direct postings. Automated, meaning this is specific to general ledger or financial reporting system. Okay, so it needs additional comment or control because in this case, real-time transaction posting to the general ledger bypasses the traditional human reconciliation and review of the journal vouchers, meaning their audit trail will be will not be implemented, okay, because it is automated. So this approach provides some benefits but also inserts risk into the FS process. So by eliminating human element in our general ledger posting activities, there are potential errors will be reduced because this is standardized and the efficiency of operations will be improved. However, there are certain risks and audit trail is not implemented. Okay, that is the setback. So the risk lies in the potential for application logic errors that post transaction to the general ledger incorrectly because there is no independent verification. Okay, it may be with wrong amounts and wrong accounts. So such errors would be systematic, okay, and could have been widespread and devastating implications for our financial reporting system. So ensuring application integrity through effective systems development and program change procedure is very essential to reduce these types of risk. But the management should make sure that at least in an automated system, they should also require human intervention, okay, to provide audit trail and to avoid these potential risks. So those are for our general ledger systems.